Hello and welcome to Business Today Television. I am Siddharth Zarabi, and with me now is Rajneesh Karnatak, the Managing Director and Chief Executive Officer of the Bank of India. Welcome to the show, Mr. Karnatak. A strong set of numbers delivered over the weekend for the September quarter. Take us through the key highlights.
Yeah, thank you so much. So if you have seen already the numbers, we have improved our global business by 9% plus. Our global advances have increased by 10%. And if you see our domestic advances, there also has been the increase. As far as the CASA is concerned, on year basis, we have increased it by 6%. So in absolute number terms, if I want to give you, so we have touched our global business at 12.43 lakh crores. The increase has been on an absolute number more than 1 lakh crores. It is exactly 1 lakh 6,000 crores. On the advances side, year on year, we have grown by 50,000 crores. And on the deposit sides, it is more than 56,000 crores. So overall, the numbers have been good for Bank of India for this quarter and for this half year, H1 for FY24.
Take our viewers through how your interest income has performed. It's up in the quarter.
Yeah, so our interest income has gone up because our advances have also increased. So overall interest income has improved. If you see the year on year basis, the improvement is quite substantial. So that is something which is there. If you see our advances side, our retail advances have increased by more than 14%. Agriculture advances are increasing by 10% plus. MSME advances have also increased 10% plus. Overall, on the RAM side, our credit has grown by 12% plus. So overall, the credit growth has been there, because of which the interest income has also improved for the bank. And if you see the interest rise in interest income, it is also attributed to the fact that our EBLR has gone up. So presently our EBLR is at 9.25%. Year on year basis, if you see the EBLR, it has gone up by 1.05%. Our MCLR is presently hovering at around, which has also again gone up, and presently we are at 8.75% on a 1 year MCLR. On a 1 year basis, year on year, if you see the MCLR, it has increased by 1.05%. So the transmission of interest rate on the advances side has been very good, and it has passed on to the borrowers. It has been passed on, though the repo rate on year basis has gone up by around 70 basis points, but the transmission from our EVLR and the MCLR has been much higher.
What is the outlook for margins for the remaining part of the year?
Yeah. So in the last quarter, while giving the guidance in June, I had said that we will protect the margin. So at that time, our NIM was at 3.03%. Now it has improved to 3.05%. So with this liquidity tightening scenario, which is already there in the market, and in between, Reserve Bank had also introduced the incremental CRR also, and the overseas also, the tightening of liquidity is there. In the American market, this Fed has also increased the rates. The rates are high, not only in America, but also in Europe. The overall global scenario, also the interest rates are going up, and liquidity is also tight. However, in spite of this fact and other issues which are there on the tightening of the liquidity side, we feel at Bank of India that we will be able to protect the margin in FY24.
Okay, at 3% plus. What about asset quality? There's been a sharp improvement in the quarter. Take us through the details.
So as regards asset quality, if you see, let me begin with our SME numbers. So 5 crore and above SME numbers, which were at 14,000 crore in June quarter, they have come to around 5,700 crores only in the September quarter. So there, if you see from the overall standard book, it is only 1.24% of the total standard book of the bank. And if you see the SMA2 numbers within that SME numbers, SMA2 numbers, it is only 0.24% of our total standard book. So the asset quality is definitely improving. That is at the backdrop of the fact that, one, we have started the zonal collection centers at all the 69 zones, where our staff is moving towards the branches, going out to the branches and also to the borrowers for collection activities for SMA 0, 1 and 2 accounts. Lot of monitoring is happening from the our zonal offices and also from the NBG offices, which are typically the general managers offices at the field level, and also monitoring from head office level, because of which the asset quality has improved. If you see our overall figures, our slippage ratio has improved. That has come down. Our credit cost has also come down year on year basis, and ROA has also improved on year basis. Simultaneously, if you see on the asset quality side, our gross NPA has come down, and also the net NPA has come down. So all in all, the asset quality is improving for the bank.
At the start of our conversation, you spoke about global business and how it's performed well. Do you expect it to sustain, at least in this vertical, given what is happening?
Yeah, global business, if you see Bank of India numbers, we are very strong as far as the international business is concerned. If you see our September book, our total global business, 17% is the overseas business, which is the international business. So as far as the guidance is concerned, we continue to the giving of the guidance that our credit growth would be around 11 to 12% for March 24. And on the deposit side, our guidance is at around 10 to 11%. So this is the number which we will maintain in spite of the global headwinds which are there at the global level and the war which is there. But in spite of the fact, we are very sure and confident that our guidance for 11 to 12% of credit growth and 10 to 11% of the deposit growth will be maintained. This is at the backdrop of our very robust franchise which is there. We have around 5,100 branches, most of which is in rural and semi-urban areas. Then we have our ATMs and CRMs which are around 8,000. Then we have our business correspondents which are around 18,000 plus. So with all these delivery points which are there for the bank and the international branches, which are 22 branches and total offices around 46 offices at the international level, we are very confident that whatever the guidance we have given for FY24 on the top line side, both on the deposit and advances side, we'll be able to meet that.
One of the issues that has been in the headlines is the growth of the unsecured book across the banking sector. We have had the regulator also comment on it. As far as the bank is concerned, the numbers suggest that the unsecured part of the book constitutes around 23%. Is this a matter of concern according to you?
Yeah. So as far as the unsecured book of Bank of India is concerned, so as per our board approved policy, the number which we have is 30%. So we are well below that 22 to 23% at least. At present, we are there. Within that, there are two parts of that unsecured book, which is in the retail segment side, which is personal loan and some part of the education loan. So as far as personal loan is concerned, we are very cognizant with the credit underwriting in the personal loan. The CIBIL score is at a higher level where we are doing the CIC score whenever we are giving personal loan. Number two, we are giving personal loans only to the salaried customers and who are having accounts with us where the salary is coming in Bank of India saving accounts. So that is one credit underwriting which we have taken. Another thing, we have recently launched that Star personal loan scheme, under which also wherever we have given housing loans, there we are giving personal loans to the borrowers where the already mortgage is there as a housing loan. So as a top up, wherever the customer is requiring a personal loan, there we are giving personal loan. On the corporate book side, wherever the unsecured loans have been given, these have been given typically to the AAA and AA rated customers, corporate clients. Apart from that, they are also being given to the central PSUs and the state PSUs, which are also backed by the guarantees. So our unsecured book, even though it is at 20 to 23%, it is well secured in the sense that there are cash flows attached to it and also there are guarantees attached to it. So, and none of them is showing any signs of any delinquency. So the book is also healthy at present. Asset quality is being maintained in that book also.
On a broader industry-wide basis, one of the things that has been observed is that uh, the fintech expansion spree is also contributing to the rise in personal loan offtake. What is your view about the overall personal loan, unsecured loan category going forward? Is this a reflection of some stress, or is it because there is aspirational demand that is feeding?
So see, the rise of unsecured loan book in the system is also because of the demand is there. So a lot of demand is coming from individual customers for unsecured loan. And now, as you rightly said, because of the fintech, it has become a very smooth click of a button delivery. So that is something the customer does not have to come to branch. It is all digital based. It is host to host, which is there. The customer can sitting at his home take the personal loan in a few minutes. That is what it is. But as far as our bank is concerned, Bank of India is concerned, on the digital side, we do have a product which is a personal loan, which is digital, which is a clear host to host digital book is there. But the underwriting is very strong. Our rule engine is very much there. The CIC score is there. We are checking the CIC score. We are checking the defaults. We are checking the income and all income tax also and the monthly income. All these parameters are being checked before the rule engine ascribes some number to the personal loan which can be sanctioned, maybe a 1 lakh, 2 lakh, 5 lakh, depending on the rule engine which is there. So ring fencing is being taken care of, credit quality is being maintained, and credit risk is very much cognizant. We are very much cognizant of the credit risk which is there over there, and so a lot of underwriting due diligence is there, even on the digital part of the personal loan.
Let's talk about lending rates. You have recently revised them, and we are in the festive season. What's the outlook there?
Yeah, so lending rates are as you know, it's a correlation of the cost of funds which is there. So deposit costs are rising, as you are aware. The T-bill rates have gone up. OIS rate 1 year is also nearing to 7%. T-bill is also at 7.14%. If you see the bank's MCLR, I will talk of Bank of India. Presently, our 1 year MCLR, which we have raised by, as you rightly said, by 5 basis point from 1st November. Now it is at 8.75% for 1 year. So it was the increase has been 1.05% on a year-on-year basis. So if you see September 22, what was our MCLR, and now what it is, the rise is 1.05%. So if you see the EBLR side, presently Bank of India is giving the EBLR at 9.25%. Our EBLR as on 30th September 22 was 8.25. The rise over there on the EBLR is 1%. However, if you see the repo rate over the last 12 months from September 22 to as on now, so presently it is 6.5%. The incremental increase has been around 70 basis point. So the pass on to the customer, to the borrower, definitely has been there, whether it is on the EBLR side or the MCLR side from the banking system. The transmission of rate has happened. So that is also because of the fact that our cost of funds is increasing, cost of deposit is increasing. So it is in line with that. In the end, we have to protect our NIMs also. As I told you earlier, that we will be protecting our NIMs at 3% plus. So we are taking care of all the things so that the profitability for the bank is also not hit at the end of the day.
Do you think peak rates have been reached, or there is scope for further upward revisions?
So we feel that because this is a busy season for this quarter up to December, there will be some pressure on the rates. But after December, definitely in the next ensuing 2 quarters, in the March quarter and the June quarter of 24, we see the softening of the rates.
To what extent, if I may ask you?
Maybe 20 to 30 basis point.
All right, Mr. Karnatak, that will fit in with what we are hearing as far as price pressures are concerned. But clearly, the entire system will be looking out in the current quarter and the next quarter, because some of the conditions that you have mentioned are likely to persist. Thank you very much for your time with us today, for taking us through your strong set of numbers in the second quarter. With that, it's a wrap on this conversation. If you've been, thank you very much for watching.